Hey everybody, it's Chip Harris again. Just wanted to get back with you on today's updates. Wanted to let you know that it appears that inflation is still rampant. Numbers today came out, the CPI numbers came out today at 8.3 in terms of inflationary rate, and that's way above the 2.5% target the Fed wants to hit. It's been that way for some time this year, and in addition to that, jobs numbers came out a little bit earlier. We talked a little bit about that last week, but jobless rate is still very low. Jobs are strong. Employers are still hiring. And so the unemployment rate is still very, very low. And so those two things combined, in my opinion, are going to continue to press the Fed to increase interest rates pretty significantly. They meet again next week, and at that point in time, I believe that they're going to raise rates another 75 basis points because things are still trucking pretty strong based on the jobs numbers and the overall economy with still high inflationary pressure. So another 75 basis points is down the road, in my opinion. Some people say 50 basis points. I think it's going to be 75 based on what I'm reading and hearing and just what I think. And I think in addition to that, when they meet again in November, I think you'll probably have another 50 base, if not 75 basis point increase. So the rates are going to continue to go up. Mortgage rates have climbed over the last couple of weeks in a pretty significant way, putting even more pressure on the housing market and buyers who are looking to get into the housing market. Your affordability factor continues to get worse, unfortunately, because home prices, at least in the North Carolina area where I am, have continued to stay fairly steady. They're definitely not going up anymore at this point in time, but they're staying pretty steady and hanging on. Some home valuations have started to even decline a little bit. But we're still in a supply and demand imbalance. There's still very low inventory on the market compared to the number of buyers looking to purchase. But that is evening out in a big way. It's starting to even out in a big way because the number of buyers looking or able to look because of affordability has decreased. So our buyer pool has shrunk fairly significantly this year by at least 30%, maybe more. And in terms of listings, even lower a lower number of new listings coming on. Now there's more inventory on the market, but it's simply because houses are sitting for longer, and home sellers are still overstretching, overpricing their homes initially, causing them to sit on the market a little longer or a lot longer than they have over the last year and a half or so. And they're having to reduce price and reduce price and reduce price until it finally sells at the market value it should have been listed at to begin with. So all that being said is happy days for buyers because there are homes sitting on the market a little bit longer. You can take a little bit longer to make decisions, do your due diligence, make offers without probably competing against a number of other people bidding on the same house, unlike a year and a half, or the last year and a half, when you're competing with multiple people on the same house, in a lot of cases overpaying and overbidding to get that house because you needed housing. I mean, that's all there was to it. Yeah, somebody who needs to move, has to buy a house. And if they find the one they want, they've had to pay for it. So for those people who did have to go above and beyond the asking price and in their minds maybe overpay for a house, remember, it's your home. It is an investment, yes, but a house is a home, and if you needed somewhere to live and you needed to actively work in the markets we've been in the last year and a half, don't feel guilt or bad because you paid what you paid for your home. I don't think you're going to see a whole lot of price depreciation or value depreciation in your housing market here in the central area of North Carolina. But I will say that as home sellers, there is a new reality, and if you overprice your home, it's going to sit on the market longer than you anticipate. You're going to have to decrease your price. So price it correctly. Take the advice of your realtor. Price it correctly up front. It'll sell still in a rapid pace, but not for probably what it would have sold for 6 months ago. Keep an eye on the inflation rate. More important to me, keep an eye on unemployment. As long as unemployment stays low, the Fed will continue to increase rates, slowing the economy even further, deepening a recession that we're already in. Just keep an eye on it. But from a housing perspective, again, from a home professional perspective, for all you realtors out there, jobs are number one. As long as there are jobs and people are making money, they're going to continue to buy houses. They're going to continue to sell houses. So hang in there. I'll talk to you later.